To lesson 8 of AIM-C. This is the first lesson in a series of 4 about the sources of business finance. When you see the little savings piggies, those are the ones which have the helps. You will consider why enterprises plan different sources of finance for different purposes or at different stages of the business, and those are relevant for each source, so it's quite a lot broken down here. So first of all, we need to build up knowledge of income and expenditure and be able to describe the difference between the internal and external sources. And then we can apply that by being able to sort through and organise and evaluate the examples of different internal sources and external sources of finance. Vocabulary in this lesson is retained profit, leasing, working capital, expenditure, and making sure you know the word capital. To make sure you completed the lesson, the success criteria is making sure you can list ways a company can make money and what they need to spend on, differentiate between internal and external sources, and being able to describe 3 different internal sources of finance. In fact, they're the main 3. And some finance careers at the bottom: a police financial investigator, credit manager, and bank worker. First of all, straightforward terminology: money in, money out, or inflows and outflows, also known as income and expenditure. It's as straightforward as that one. So moving straight to income and expenditure, your first task is broken into 2. Task 1A, list 3 ways a company can make money for their business. Yes, that's 3 ways. And task 1B, list 3 ways a company spends money on their business. Fill in the boxes below with your answers. Expenditure. This gets broken down into 2 further subcategories. Capital expenditure, the purchase of fixed assets and spending on items held by the business in the long term. These will be accounted for in the statement of financial position. And revenue expenditure, the purchase of goods and service that will be consumed or have already been consumed in the day-to-day operations of the business. Task 2 split into 2 parts. Task 2A, list 2 items a company will purchase for long-term assets. Task 2B, list 2 items a company will purchase for the daily running of their business. Question 3. Let's check that you took in the last few slides of information. Explain the difference between income and expenditure in your own words, and as much as you can, try not to flick backwards to double check. Sources of finance. Guess what? They've also been divided into 2 categories. You have externally available to the business, which has to involve someone outside the business. That's what that means. So those are external sources of finance. And guess what? The other one is internal sources. They're internally available to the business. No one else is involved. It's just within inside the business. Let's see how you fare then. Task 4. Organise the green words into internal and external sources of finance. You can move them to the left for external and to the right for internal, or create a table in your book with 2 columns. We will check the answers later on during this lesson. Question 5. Identify which relates to fixed and which relates to current assets. Capital expenditure and revenue expenditure. Now this was looked at in terms of slide 5 when we covered the 2 types of expenditure, one of which was long term and can be seen in the statement of financial position, and the other covered the daily operations of the business. So you need to work out which is which, obviously. Sources of finance. It's all very well looking at sources of finance, but we need to be official in terms of where it's from and what it's for. So let's first have a quick look at what it's for. We're looking at 3 reasons: startup, growth, and working capital. So here's one by one. The money that enterprise owners will use to create their business is known as startup finance. Some people will finance the startup costs using their own money. Others will use a source of external finance, for example a bank loan, to help create their business. Starting an enterprise can be very expensive, and it may take some time before the initial startup costs are repaid. If an enterprise is successful, the owners may decide to expand. Expansion or growth might involve, for example, producing and selling more products, opening a new branch of the enterprise, moving into new markets. The sources of finance required for enterprise growth are similar to startup sources. However, successful enterprises might be able to use retained profit to finance growth. Working capital is the money an enterprise needs to function from day to day. This money will be used to pay for things such as stock, bills, wages. Working capital is closely linked to cash flow. An enterprise must have sufficient working capital to keep it running. So here it is all together. The reasons for finance is at the top, and as you go down you can start to look at whether it is internal or externally sourced. But hang on a sec, they're not actually labelled. So you have task 6, which is to identify which are the internals and which are the externals. Slide 7 should give you a hint. Question 7. Explain what startup finance is. Question 8. Explain what finance for growth is. Question 9. Explain what working capital is. Now, zipping back to slide 9 will help you, but also going back to the statement of financial position and statement of comprehensive income will also help you with exactly how to calculate working capital. Question 10. Identify if the sources of finance in this table are internally available to an enterprise or externally available. All you'll need to do is tick the box, or if you're putting it in your book you'll need to copy the table and then just do the ticks. So we're looking at owners' funds, credit cards, retained profit, overdraft, leasing and sales of assets. Now you've looked at these on slide 7 and slide 10. So let's see what you can do from memory. If not, go back to those 2 slides to double check. Question 11. Give 3 examples of working capital costs. You'll probably need to zip back to slide 9 just to double check your definition again. Question 12. What are the 3 internal sources of finance most readily available to an enterprise and what is meant by each? So this was covered on slide 7 and 10. 7 was where you were moving the green words into the internal or external, and 10 could help you with the answers. And here you've got to obviously list them in the left hand column, and you need to write in your own words your explanation of each of these 3 in the right hand column. There's quite a fair bit on slide 9 too, if that helps. And you have covered one of them. Oh, I can't even tell you that one because that's going to give it away. But one of them we've covered very much in A and B lesson 6. That was the Edna lesson. We've just been covering it in sources of revenue as well. So it's quite a popular phrase we've come across. And another one, it's clues without the words, we've covered in the Lego lessons in terms of profitability as well. Fantastic, you have completed all 7 tasks for lesson 8. You've looked into the 3 ways to make and spend money, the 2 long-term assets and 2 daily items, income and expenditure differences, internal and external, fixed or current assets. And then we've looked at the most important bit, number 6, the definitions of starting, growing a business and working capital, and the internal sources summary. Well done, a good start.